Hi everyone. So let's see how market has reacted on March last week. So yeah, let's start with pre-open market. So you could see that Monday we had holiday. So it was 26th March 2024, and market opened with 21,947, and it was a huge gap down with 148 points gap down. 6 declines and 39, so 6 advances only and 39 declines, 5 unchanged. And let's now move to Bank Nifty. So Bank Nifty was opening with 46,552 with minus 310 points gap down with only 1 advances and all the 7 banks declining. So you could see the data here unchanged. And then let's move to trading view. So here we will be checking the support and resistance and how market moved today. Yep. So I'll change the time frame to 15 minutes because 15 minutes is the best time to check any data. So here you could see that from 21st, 22nd and 26th it was pure sideways. So last week whenever market consolidates in a certain range, like it is consolidating between 2820 which is resistant and 2650 which is support. So yeah, we'll be making it little down. So you could see this is the consolidation region, and you could see that the sellers are active into these two regions. So now from 3 days it has been consolidating, so I'm expecting that today Bank Nifty expiry market may break out in one zone, and wherever it breaks out it just moves 300 points for Bank Nifty. For Finnifty it may move around 200. So you could see today yesterday on Tuesday Finnifty had expiry, and then it was pure sideways market here, which was moving around just 100 points, that is from 650 to 750. So we might expect a gap down or a flat market. That depends upon how the market has been positioned. So here we will take the Bank Nifty example. So you could see market is moving between 500 points from last 3 days, and yesterday it was just pure sideways. So yeah, it was moving from 800 to 500, between 300 range. So yeah, there you go. And the ADS is rising, so we might see good change. Now I'll go for Nifty. Nifty was also in good range. So yeah, if you try to break out, but then it didn't break out because Bank Nifty and Nifty didn't support it. So from 21st, 22nd and 26th, 3 days it was consolidating. So today whichever path it crosses, it might show a trending market. So let's wait and watch on Wednesday. And that's it for support and resistance. So we'll watch IV as well. IV is 12.82, which is again low. So whenever IV is low, it indicates the buyers are not interested, so sellers are getting the profit from the time decay. So we'll go for trading tick website. Here you can see the trading tick website. So we'll go for call versus put for Nifty. So I kept 1 minute interval, and then I didn't put any range because adding range might change the result. So you could see here this is change in OI. So here this is change in OI and this is total OI, where both the call is in leading position, and here the put is very low. That's why the market it's been range bound, and then here the put is equal to the comp. So when this compensates, then the market will be opening flat, but it also depends on global market. On the total OI side, we'll see put is increasing, and then it's just having some profit booking, and the call is increasing, and at the end it had some profit booking. So we'll move for Bank Nifty, and we'll check for Finnifty as well. We'll go for Bank Nifty. So here we go, Bank Nifty. You could see that the call is taking the higher position while the put is lesser, and then we could see here the profit booking has happened at the end after 2:30, so which didn't reflect in the price action because the call compensates the put, so both are equal. Then the market remains in a range. See, it was between the 40 points range. So yeah, that's it. So when we check for total OI, we have the call on the higher end and the put was lower, slightly lower than that. So today, there are too much happening in the market because we might see there's a big huge difference here. So we can see that in the pre-open market. Also, you could see here the call is higher than the put. So if this is purely selling, then we might expect a gap down market because whenever the call is higher, you'll have a gap down. Whenever the put is higher and then it's been short covered, then the market will go on the upper side. Okay, so we'll go for Finnifty. Again, Finnifty to same how we had the expiry. So you could see in Finnifty there was a very nice a profit booking at the end because it was expiry. It was monthly expiry as well as weekly expiry. So you could see here the call and put both were in the same range. Here call was slightly more than the put, so I don't think so there would be a more change in the price action because it had the call profit booking will be offsetting the put profit booking, so the market will be in range. But then today we have Bank Nifty expiry, so we might expect a little bit of turbulence in the market. And that's it. We don't see the mid cap, so we'll straight away move to straddle snapshot. So not premium, so we'll be getting ads. And yeah, so we won't check for Nifty because there wouldn't be any good decay for Nifty. We'll check for Bank Nifty. As you know, the market opened at 46,600 plus, so we'll take the 46,600 strike. So we'll check all the strikes. It was +2 and -2, so you could see there's a good decay. So 46,800 CEPE started here with some 525 and then ended here with 359, so it's a good decay. And we have the red which has the same range. You could see the nice decay, time decay. 600 yellow line is also having the nice decay. 500 is green line having the nice decay, and 400 we have the nice decay. So these 5 strike prices has given the best decay, so we might also have the count increase to 10, and then you could see the everything from 46 to 100 to 4700 is showing the decay because yesterday the market was completely sideways. All the +5 and -5 from the open, that is 46,600, would show a nice decay, but our interest is only 5 because that is what we are looking for during sideways market. And we would check for Nifty as well because we had the expiry. During expiry, always remember the decay would be very good. And then there you go, 650 range or 600 range market open, and everything +2 and -200. So how I take is you do +100 and -100, so 20, 650, 700, 750. On the other side 600, 550. So everything is showing you decay, so which is like the decay points is equal to the seller's profit. Then by the way, this is for one lot, and then you can take for more lots as well. It doesn't mean always that it will end up in profit, so sometimes it may end up in negative as well. Say for example this strike, 450 strike, it started with 314 and then ended with 258, so which had the minimum decay. So yeah, sometimes it might go up as well. Yep. that's it. I'm going to keep that in 5. Okay, so then we will go for participant wise OI. So this is the new thing I'm going to add, which actually shows how the FII and DIA have taken a position. So you could see here for future, this is the change and this is the actual actual quantity they are holding. This is for client, DII, FII and pros. Client is retail here. So there you go. Here let's remember the futures, the change will be always 0 because the futures we don't have the concept of decay. It's just purely buying or purely selling. So yeah, so you could see that they have shortcut. They have taken this much from the short and added in the long, but still the long remains higher, so they still believe that the market will be going on the upper side. So you see DIA is also having the upper side, but FII is on the short position, Pro is on the short position. Okay, so then we have call long and call short, then we have put long and put short, and then we have future stock long and stock. So future stocks is not needed because stocks purely doesn't move like Nifty or Banknifty, so we don't have to worry about the stock. Only thing we have to worry about is the index, because index clearly shows what's happening in the market, and then we are interested in the index. So yep, that's it. Here we could see the more consolidated form of how much is selling and how much is buying is going on in crows. So this shows both DI and FI. And yes, sorry. And then we'll go for option chains here. Why I'm showing you NSE page is whatever we saw in trading tech website is the same thing is going on here, but the decay is how we should see AC. So where the market ends, those strike price are given here, and the decay is represented in the red color. So whatever the red color here is the profit for sellers, and whatever the green color here is the profit for buyers. So you can clearly see that both the end we have red colors. This minus 75, minus 8. So we have to add these both, and then that is the profit for sellers for that strike for CE and PE. Here we could see that this side indicates call and this side indicates pull. So this side means this is 22,000. Let's take for example 22,000 CE sellers is this, 22,000 PE sellers is profit is this side. Okay, so you have to take that way. If you are taking straddle, if you are taking strangle, then you might build a CE above here and a PE below here, and then the total of these two decay points, the change points, gives you the actual profit. And this is how you check for Nifty, and for Banknifty you have to change here, and then again the similar thing is shown here. So you can see see this is 46,600, so that is the PE side sellers and CE side sellers, and this is how much the decay points they have gained. So you can see clearly the buyers were profitable only after 47,000 PE, which is like starts from 20. The other sides you can see these is the loss for buyers, which turns into P, the gain for sellers. This is how we check for profit, gain and loss in the NSE website. Okay, that's it. I think I've pretty much covered everything. That's it. Thank you.